An even bigger threat is to the dollar and to our currency. I follow Jim Grant. I think he's one of the smartest guys out there, looking at the economy and the Fed. He thinks we're due for interest rates, high interest rates for a long period of time, but we're accumulating debt at $1 trillion every 3 months now. This is an extraordinary thing, and interest rates are now becoming the highest or one of the largest items in our budget. People can talk about wanting to help other countries. We don't have the money. It has to be printed up. It's destroying our currency, and it's why it costs more to go to the grocery store to buy your groceries. There is a possibility we could go too far with this, and we could have a cataclysmic economic downturn, recession, depression, destruction of the currency.
Wow, harsh words there from Kentucky Senator Rand Paul. He joined me on Sunday Morning Futures on the threat to the U.S. dollar, our currency, and his work with Jim Grant. With a pause announced tomorrow. Joining me right now to get in front of it is Grant's Interest Rate Observer founder and editor, Jim Grant. Jim, great to see you. Thank you so much for being here this morning.
Thank you, Maria.
Senator Rand Paul just mentioned you in his comments.
Wasn't that nice?
Yeah, that was very nice. Congrats. He's particularly of interest of your comments on the dollar and inflation today and $33 trillion in debt. Your reaction?
Well, I think the thing to keep in mind with regard to inflation, Maria, is whatever this number we're about to see reveals, inflation is, importantly, it's not transitory. It is permanent in that you never regain the purchasing power you have lost to inflation. There's no such thing as deflation in modern monetary life. So the political significance of this number is going not so much that it's going to be up 0.1% or 0.2, or the core might be up 0.3 or yours. The important thing is that the loss of purchasing power since 2020 is in the low teens, and that is not going to be recaptured. And that's, I think, what the political significance of this number is.
So do you see a threat to our currency, the dollar, Jim?
Well, the currency has been on a long slide with respect to its purchasing power, for example, in gold bullion. That is a design feature. It's not so much a fluke. The Federal Reserve is targeting a loss of purchasing power on the order of 2% a year. So we live in an age of inflation. The question about the dollar is, what is the next best thing? And compared to the competition, the dollar looks pretty good on the international stage. It does not look so good with respect to purchasing power at home, nor with respect to the long-term decline in gold value.
Yeah, it's a really important point that our interest payments are soaring, and it's only getting worse the higher the debt goes. But, Jim, what do you think the Fed does at this point? Where are you in this debate about rate cuts next year?
I think that Chairman Powell is still mortified at the Fed's failure to identify the upsurge in inflation that began in 2020 and 21. And the last thing he wants to do is declare a preliminary and premature victory. So I think that the Fed, much to the disappointment of the speculators who are banking on an early reduction in the funds rate, I think the Fed is going to reassert its determination to see the rate of inflation as measured fall to the order of 2% rather than, say, 3 or 3.5. So I think the Fed will begin cutting, but only gradually and only later than the market is hoping.
Well, I mean, look, we're waiting on this inflation number. We're expecting year over year to be up 3.1%. But even when you look within this report, some of these components are still quite elevated, like shelter and food and even oil.
Yes, well, that is the nature of the modern monetary system. In the day, in the first 150 or so years of the United States, there would be periods of rising prices followed by periods of deflating ones. Often the deflation was a benign kind in which real wages actually rose. But at the end of a long-dated period, whether it be a century or a century and a half, the purchasing power of the dollar was essentially unchanged over that long span of time.
Right.
And what is different since the last half century or so is that there is a ratchet up, but never a compensating move down. So that's why people, I think, are less moved by the rate of change in inflation than the level.